Good morning, and thank you to all of those of you who are joining us today to hear from Benchmark Holdings, who reported their Q3 results last week. They're here today to just talk you through their presentation and take some Q&A at the end. So without further ado, I will hand you over to Trond Williksen, CEO.
Thank you, Anna, and good morning to all of you, and welcome to this presentation. I am Trond Williksen, CEO of Benchmark, and as usual, I am here with our CFO, Septima Maguire, and together we're going to give you insight into our financial and operational results for the third quarter or financial year 2021. At the end of the presentation, we will also share with you our views on the outlooks for the remainder of the year as well as for the time to come. Moving on to slide 2. This time, I would like to start with presenting images of something that happened after the end of the quarter. As some of you probably guess, these are pictures from the first operations with Ectosan Vet and CleanTreat in Norway. This marks a very important strategic milestone for us in Benchmark, since the launch of this solution has been a very profiled strategic priority for us in Benchmark. As we announced on July the 15th, we then passed the last regulatory step necessary to launch the transformational sea lice solution with the adoption of the MRL for Ectosan Vet in Norway. This announcement followed the announcement we did on July the 2nd, when we received the marketing authorization for Ectosan Vet. So where we are now, the regulatory hurdles are all cleared, and to our satisfaction, we did that very close to the timelines that we have been communicating along the way. Passing the last regulatory hurdles means that we now have moved into a commercial and operational phase for Ectosan Vet and CleanTreat. As we have stated before, we are starting out with 2 systems and focusing on Norway, the biggest market. The first system went into active operation mid-August in accordance with our operational plan, and the second system will follow very shortly. The initial operations have been good. We already demonstrated that the solution is highly efficacious, and the operation and precision of the CleanTreat system is good. Customer feedbacks from the initial operation has been confirming what we hoped the solution would represent for the farmers in practice. Having entered now into a commercial and operational phase with Ectosan Vet and CleanTreat means that our health business area, as well as the group, has moved into a new chapter of its development. We can now look forward to having 3 cash-generating business areas in the future, bringing Benchmark towards our goal of becoming a sustainable, profitable company. This has been and it remains a very, very clear objective for us in the management. The news that is illustrated on this slide is certainly very good news for us, and it should certainly be good news for our investors also. Move to page 3, please. Then moving into the highlights of our third quarter. In short, Q3 has been a very, very strong quarter for Benchmark, and another quarter where we consistently have improved our performance and been able to show strong results. Revenues for the quarter ended 17% ahead of prior year, with strong performance across all 3 business areas. Starting out with genetics, revenues ended 21% above Q3 last year, driven by higher sales of salmon eggs, with strong performance out both of Norway and Iceland, where we have our main facilities, and where we also are sold out for the remainder of the year. Salmon genetics in the Northern Hemisphere still remains the backbone commercially of our genetics business, while Chile, SPR shrimp and tilapia are more in early stages commercially. Moving over to advanced nutrition, which has continued its strong rebound with revenues ending 15% above prior year Q3, reflecting growth across all product lines and a continuation of its good commercial and operational performance. And finally, our health business area revenues have increased by 20% above Q3 in 2020, benefiting from a higher salmon sales. On the back of these revenue developments, we have also seen a very strong improvement in our earnings. Adjusted EBITDA more than doubled compared to last year's Q3, a result of higher revenues, operational improvements, and continuous cost control. Looking at year-to-date Q3, the financial results reflects the continuous improvement that we've seen throughout the year. Measured in constant exchange rates, the group's revenues have grown by 15% compared to last year, while adjusted EBITDA have grown by 38% compared to Q3, year-to-date Q3 last year. All in all, what we have shown in Q3 is what we consider being a strong performance and a continuation of a steady improvement that we constantly work hard to achieve. And the good news is that this is nothing we see as coming true by random. As we consistently have communicated, we see a lot of potential in the group's business area, and we have started on a journey to realize this. We are very well positioned as a group, providing sustainable solutions for a growing aquaculture sector, and we are well aligned with ESG trends we believe will make us as a group stand apart. Key to bringing out value is disciplined commercial aimed operation and ambition to drive the group forward, combined with financial controls that enables us to gradually improve our financial performance. That is what you have seen so far, and this is what you should expect going forward. So, having said this as an introduction on the highlights for the quarter, in order to give you more insight into our performance for the quarter, I will leave it up to Septima to take us through the financial results in more detail. So, over to you, Septima.
Thank you, Trond. So, Q3 has continued the progress we've been making in financial year 21 to deliver growth in all of our business areas, with 17% revenue growth in the quarter. On a constant currency basis, this is equivalent to a 25% rise. This increased revenue has driven growth in both gross margin and adjusted EBITDA, which has risen to £4.4 million in the quarter, and adjusted EBITDA margin of 15.5%, up from 8.7% a year ago. It should also be noted that Q2 2020, the comparator quarter, contained a number of COVID-related cost containment measures, such as temporary senior staff pay reductions and a pause on discretionary spending, most of which are not repeated in the current financial period. Taking this into account, the year-on-year improvement is even more notable. Net debt excluding lease liabilities of £52.7 million and cash at the 30th of June of £43.2 million reflects the continuation of the CapEx projects, and we'll look at that in more detail later in the presentation. If we could move to slide 6, please. In advanced nutrition, Q3 delivered strong growth in all product areas, resulting in overall growth of 17% at a constant exchange rate for the quarter to £18.4 million. Now, this is particularly pleasing as it continued the growth in our Artemia and diets, but it also moved our health product area back into growth of 7% on a year-to-date basis. Over the past 12 months, we've taken important steps to strengthen our commercial efforts in advanced nutrition, enhancing our digital presence and customer engagement. These actions have enabled us to regain market share as the market returns to growth. Looking at it from a market perspective, we're starting to benefit from a recovery in the shrimp markets as HoReCa reopens in the end markets. and the outlook is positive with significant upside to reach pre-COVID levels. It's important to note, however, that we're still seeing some volatility in production markets due to COVID, and so therefore we remain cautious. The improved revenue and good cost control drove the improvement in the adjusted EBITDA margin, which increased to 18% in the quarter, showing the operational leverage in this business area. In the year to date, within this business area, we've invested £3.2 million of CapEx, which included the planned investment to upgrade the safety of our facility in Thailand, which is now complete. Our Thailand facility is the most important manufacturing site in our nutrition business area. In addition, as part of our environmental programme, we're exploring new ways to adopt more environmentally friendly and efficient energy solutions. This will play an important role in achieving our emissions targets. Moving to the next slide, slide number 7. Moving to the genetics business. As we had expected, Q3 delivered strong salmon egg sales in the quarter, which drove overall revenue growth of 18% at constant exchange rates to £8.7 million. Adjusted EBITDA grew to £2.2 million in the quarter, but was slightly down quarter on quarter when you exclude the fair value uplift, at 1.9 million from 2.1 million last year. This is driven in part by increased costs associated with the ramp up of our new Chilean facility and increased activities this quarter versus last year due to COVID measures. In this financial year, we've focused investment in each area. In our SBR shrimp, to grow capacity at our Fellsmere shrimp facility up to 100,000 breeders to support the commercial ramp up. In tilapia, we're investing to support the facility being able to produce and sell fry all year round and being profitable, profit contribution as a consequence. And in our salmon business, we've been investing in a new incubation house in our Iceland facility, and of course, the establishment of our new Chilean egg facility, which will have first sales in Q4 of this financial year. Next slide, slide 8. Revenue in health in the quarter grew 20% to £1.2 million due to Salmasan sales, which showed growth in both Norway and the Faroes. This resulted in the adjusted EBITDA loss of 1.2 million being largely flat quarter on quarter. Within the period, the activities of this business area were focused on getting the marketing authorization for Ectosan Vet, which we've now received post-period end, and mobilising the vessels to allow for the Clean Treat launch, the first of which has now occurred, with the second vessel launch imminent. The invested CapEx of £3.1 million has been solely around the costs for the Clean Treat units and the related mobilisations. Next slide, slide number 9. As noted previously, Q3 2020 had a number of areas paused or reduced operating costs, which can be seen in the chart shown for both OPEX and R&D. In health, you can see the impact of the ramp up of costs as we move closer to the launch for Ectosan and Clean Treat. Nutrition has maintained some cost control measures even in FY21, as it was the part of our business most significantly impacted by COVID. Genetics had paused a number of discretionary projects last year in both OPEX and R&D, and we can also see increased costs associated with the ramp up of Chile. When we look at R&D, including capitalised, the health investment was focused on work associated with the Ectosan MA. Nutrition is flat, and genetics investment has increased with increased activity levels in both the SBR shrimp development programme and general activities around the salmon breeding nucleus. R&D in the income statement rose slightly to 1.6 million as a result of this general increase in activities. Moving to the next slide, slide 10. So, focusing on the cash flow, the improved trading resulted in cash generated in operations of 4.8 million. But in Q3, we've a scheduled payment under our Artemia contract, which drove the working capital outflow. The CapEx spend, as noted throughout the presentation, has been concentrated to support growth within our business areas. With cash of £40 million and available liquidity of £51 million at the 23rd of August, we remain well within the liquidity covenant of 10 million and remain focused on cash control and pacing our investments in line with available cash of the business and to maintain a strong balance sheet that can support the momentum in our business and also our future growth. Back to you, Trond.
Thank you, Septima. And moving over to outlooks. Market-wise, we see positive signs going forward. The society is now moving back more to normal, with the consequent reopening of the hospitality sector creates a positive outlook for the aquaculture end markets, which eventually drives the demand for our solutions also. Conditions in the salmon industry are positive, with recovery in prices after drop related to COVID, and the demand growth for salmon continues to exceed global supply. Sustainability is key to the salmon industry's future development, and the largest challenge in that industry remains sea lice, which we are in a very unique position to help the industry with, now having launched Ectosan Vet and CleanTreat. The shrimp market is recovering with potential to bounce back to pre-COVID levels, despite continuous hardships due to the pandemic in certain markets and production regions. We are very well positioned in this market with our specialized nutrition solutions that we have shown throughout this year is in demand. We also continue strengthening our commercial organization and efforts in the nutrition area. For the remainder of the year, we expect to trade in line with market expectations. We have good revenue visibility in all our 3 business areas. Looking forward into financial year 22, consistency in performance is expected to continue in genetics and advanced nutrition. Given where we are now, the health business area will start benefiting from Ectosan Vet and CleanTreat revenue streams, which eventually also will bring up the financial performance for the group for the months and years to come. And along the way, we will keep on driving progress in our strategic priorities, supported with disciplined investment in our growth vectors. Move to slide 13. I would like to underline that as a company, we are uniquely positioned to deliver on one of the largest ESG opportunities, supporting sustainable production of food from aquaculture. Taking on this opportunity, we will not get ahead of ourselves. We will stay disciplined, making sure we continue to deliver on the short and near-term objectives. We'll be focused on core, focused on our financial controls, and we will have our eyes fixed on obtaining sustainable profitability for the group. So with these words, we conclude our presentation and we open up for Q&A.
Thank you, Trond. And as a reminder, if you'd like to submit a question, you can do it via the Q&A button on the Zoom panel. Okay, Benchmark will have 2 boats available for treating salmon with Ectosan and hosting CleanTreat. Will the number of boats available for this work limit revenues in the short to medium term? Will it provide competitors with an opportunity for putting forward other sea lice solutions, which may be less capital intensive and more timely?
First of all, the toolbox for sea lice treatment is already, you have several solutions already in the market. Mechanical treatments to a very large extent. The weakness of those solutions, which is the real competition for us. The weakness is that you have, it's not very good for the fish welfare. You have high mortalities, and the efficiency or efficacy of those solutions are limited. So we come in with a different value proposition than the competition, and I don't see that anybody else could come in with competition that really matches that short term. What we have said is that we would like to be precise in what we are doing. So we start out with 2 systems, and we will ramp up or expand the number of systems as the demand and the customer uptake of the solution increases. That has been our plan. That's what we have communicated, and this is what we stick to. In this phase, it's extremely important for us to be precise and get things right. And so far, it looks very good. But we, in this company, we like to have our arms around things and have a clear visibility before we are getting ahead of ourselves and investing aggressively or ramping up aggressively. That's the thinking that has been there, and that is the thinking that is still there.
Okay, perhaps. Oh, please continue.
If I can just add, it's been over a decade since a new medicine was added into aquaculture in the Norwegian market. So from a competition point of view, the barriers to entry are, if it's a medicinally based solution, are registrations, its maximum residue levels, all of the hurdles that we've gone through over the last 10 years. And this is and has been proven in trials, but also now in practice, to be a highly efficacious solution. And as Trond mentioned, very gentle on the fish. So, from a toolbox perspective, in the event that competitive products were to come onto the market in the future, Benchmark are confident that this tool of Pectazan alongside Clean Treat has a future value proposition that's very solid.
Perhaps leading on from that, then the question is, they note the company's signed up only 2 customers to date, despite many salmon farmers being involved in the trials. Is that a sign of slow customer adoption? Obviously, the success of this is quite at the heart of your investment case for now.
No, I don't think that it has been slow customer uptake. To be honest, this is regardless of that we have done 18 tests before, large-scale tests, with several farmers. It takes some time before to see how the solution is working, and before they're entering into using this. We have large interest for the solution. We already have one vessel that has a contract, long term with 2 of the main players. I think that's an achievement. That's a very, very strong signal in the market, and the interest to get into the second vessel is absolutely there. So to be honest, I've been positively surprised by the interest that this solution has had so far.
Thank you. Perhaps one now on management. Could you give a little bit more detail on senior management and any changes you've made over the last 12 months? And have you seen many changes to business travel and expenses as a result of the pandemic?
Well, not to go too much into the detail of how we are looking at the management, but first of all, I think we have very good management. So I'm very happy with the management that I have in Benchmark. I should be underlined and underscored many times. We are doing natural changes and strengthening of areas. So it's more like an incremental process, organizational development that we are doing. And that's what we're going to continue with. We need to have the right resources in the right places, the right capabilities to execute on the business plans. So that's always something that is in movement. But the management we have now is strong on all areas, and so I'm really happy with where we are right now. In terms of travel and cost, yes, we have been in a very unique situation or strange situation. Everybody, like everybody, when it comes to not being able to travel. To my surprise, and I don't think I'm alone of that. That has worked. It has actually worked much better than we anticipated coming into COVID. That no travel has been less of a restriction for us in performing than we thought. So it has been working very well. Going forward, it will be more travel, I hope, and I think. I don't think we'll go back to the old paradigm, or we will not go back to the old paradigm in terms of how we used to do things. You know, I think we have learned a lot of, had a lot of experiences over these 1.5 years that we will bring with us. Take down unnecessary travel, reduce cost on that side, but of course we will do the necessary travels in order to operate the business as efficient as possible when that is necessary. But I foresee that the cost is going to be reduced significantly from what it was pre-COVID.
Thank you. I don't have any more direct questions. I see one of our attendees has raised their hand. I'm afraid I am unable to mute you on this webinar function, but if you would like to submit your question via the Q&A panel, we can read it out. So we can give you a moment to submit your question if you would like to. Or anyone else. And if you're feeling a little shy, you are welcome to email it to me afterwards, and I will certainly forward it on to the company and get a response for you that way. So unless I see something, we shall thank you both very much for your time today, another helpful update. And I think the next thing we can look forward to is your final results in November. So thank you very much for your time.
Thank you, Hannah.
All right, thank you.
Bye-bye.
Bye-bye.